Started here in a minute. I hope everybody's having a nice spring evening. You realize it's already mid-May? Jeez. Get started. Tonight, we have the honor of having Ron Haydt from Market Tamers with us. His topic tonight is on seasonality, which is very important if you're trying to put all the probabilities in alignment, that if you have a good inclination of what stocks move when, at least now you have something to kind of refine your searches. So I'm going to let Ron give you his background and show you some very interesting stuff on seasonality. Ron, welcome to the Candlestick Forum.
Hey, Steve, thank you so much. Thank you for the kind intro. Hey, everybody. I'd like to do a quick test to make sure you guys can hear my microphone. If you can just type in yes real quick. All right. Hey there, Susie. All right, cool. Awesome. All right, great. So volume's good. You should be able to see my screen here in just a moment. Can everybody, let me do this. I'm going to put another line of dashes in. All right. Huh. Boy, Omnovia is having a fit right now. All right. Steve, I'm going to actually, we need to see your peanut slide. What is going on here? So it's interesting. We were just using Omnovia yesterday. We were having a couple little hiccups, but looks like we're good now. All right, so you can hear me good. The screen is up. I'm just going to move the slide. Let me see, Steve, if you can see this. It says, welcome to Market Tamer is the next slide.
Exactly. We've got welcome to Market Tamer. Yes.
Awesome. All right, so we're good to go. So that trick of just coming back in did the magical thing. So I'm ready to rock and roll. All right. Thanks, Steve. And thanks, Jim, as well. All right, folks. My name is Ron Haydt from MarketTamer.com. You might have heard myself or Gareth speak in the past. Our passion is to educate investors through options trading to make a difference in your portfolios, as well as when we find new things, we want to share them with our members. And what I'm going to share with you today is something that Steve is one of our best partners. So we're bringing this presentation to you tonight before something changes in the future, which we'll get to at the end. So we appreciate Steve allowing us to speak tonight. We appreciate all you guys spending your Thursday night in mid-May, as Steve said, with us. So without further ado, I do have to show the disclaimer, and let's go ahead and get this show on the road. If you guys have any questions, what I'm going to do is I'm going to wait to the end to take them. So just go ahead and jot them down, and I'll be happy to answer any question you guys may have. All right? Cool. Let's go ahead and get going. All right. This is something you might not know. Successful retail traders, the ones that make more money in trading profits each year than those of us with jobs typically make, attribute a good portion of their income each year to a certain set of reliable stocks that react in practically the same manner each and every year, like clockwork. So imagine for a second if you could practically count on making a certain amount of money each year from your trading. Wouldn't that be nice? Imagine if your monthly income goal could be covered by a set of stocks that react practically the same way each year, and that you could then focus the rest of your efforts on either trading more often elsewhere or simply go off and live your life doing something other than trading. So that's exactly what we're going to explore today. We're going to talk about individual stock seasonality. We're going to talk about how to take that seasonality, the predictability of it, to make a boost to your portfolio. We're going to talk about springtime stocks. We're also going to talk about some secrets of a hedge fund manager. So to introduce the topic of today's session, is think about the following. Why does Santa Claus rallies take place? You've probably heard the term, but just in case, a Santa Claus rally is, referred to as the time when stocks rise in December, or about that time of the year, and it's also often seen during the final week of trading in December. Or maybe what about the January effect? That's when additional funds come into the market to the start of every year. Or how about another one? What about window dressing? That's when fund managers sell losing stocks and they buy the high flyers to create the old illusion near the end of a quarter, window dressing. Or, as Robbie just typed in, how about the old adage, sell in May and stay away, or sell in May and go away? That's historically when the market has tended to perform worse during the months of May to November, and we're in May right now. Another big seasonal effect is called the Halloween effect. This is a variant on the sell in May and stay away adage, which supports the belief that markets will generally outperform from November to May. So you might think this is a stock market phenomenon, but it's famous in the medical field too. Do you guys know this? There's a July effect in the medical field. It refers to the increased risk of medical errors at the time of year and occurs in association with the time when medical school graduates begin residencies. So you have all these new graduated folks, or they're brand new and they're doing their residencies coming in July, and guess what happens? It's probably not the best time to think about having a surgery. That's very interesting. Check that one out. Some of these effects may be some of these effects may be well known. But for example, should you buy companies that make chocolate right before Halloween? Or would you buy retailers ahead of the fourth quarter, ahead of the holiday season? Would you do that? The most common seasonal patterns may be well known, and you could put a post-it note on your calendar to remind yourself of them. But that's not exactly a systematic or scientific method. And while old adages give you a sense of the big picture, they do not provide you with insight on any given day with specific stocks. While you may not have that insight, it is absolutely known to insiders. They have an information advantage because they know seasonal patterns, specific patterns for every stock. And that's a huge advantage. They know how a stock is likely to trade before it even trades, because it has traded a similar way many times in the past. It's actually very simple. Think about what advantage that would be to know whether it's Boeing or Apple or Google is likely to trade based on a historical seasonal pattern before everybody else does. The truth is, when you hear the old adages on TV or in publications, print or web, the news is already out and it's often too late to jump on board. And it's no fun playing catch up when the train's already left the station. So it's no surprise why professional traders have access to data that you don't. When you think about it, they've got access to millions of dollars in resources to identify ways to exploit the market to their own benefit. So for them, it makes sense to spend a few million. After all, they're trading billions. But as an individual trader, you don't have millions of dollars to pour into hiring the best programmers, quant analysts, and software to scan the market. Up until now, retail traders have had virtually nowhere to turn to get this information. And that's where we come in, until now. Last year, Gareth and I stumbled upon perhaps one of the most exciting trading systems out there. It truly blew our mind. Greg had spent up to 80 hours a week for 2 years developing a powerful software trading system. He realized that insiders had valuable information by knowing what stocks were likely to move and when they were likely to move. And it's all based on the topic of tonight, seasonal patterns. So he knuckled down, researched, read, programmed, tested, iterated, programmed some more, and then became engulfed in a massive project to identify what historical seasonal patterns of individual stocks in specific ways. Literally thousands of hours later, he had a system that would simply spit out the stocks each day that had a high probability of trending. Needless to say, when we heard about that, we got quite curious. So Greg had figured out a unique way of exploiting the market that mostly only insiders had access to, and decoded the seasonal patterns to produce daily trading candidates that could be transacted for maximum advantage. To say I was on the edge of my seat after our first communications is an understatement. We were dying to see what was under the hood of this trading system. So Greg allowed us to review the data he amassed over the years. Massive data looks like chaos to most people, myself included when I first saw it. When we looked at it, we saw it was distilled into a few high probability stock selections. And we quickly came to appreciate the power of what he had created, turning complex data into simple yet high probability selections. So in fact, we were so impressed with Greg's work, we instantly offered him the role of Chief Technical Strategist at Market Tamer. Here are some of the recent trades which typified the exact kind of results Greg showed to us when we analyzed spanning not just days, weeks, months, but years and decades of data. So here we go. But first you need to know a few things about what Greg shoots for with these trade candidates to give you some background. And it's best to begin by sharing what the methodology does not do. This approach is not attempting to predict huge winners some small amount of the time in order to pay for a bunch of losers. That's not it at all. The key thing in our whole presentation is about high probability. That's what we're after. The goal is to find stocks likely to move at least 5% over the next 3 to 9 weeks. So we're talking about a month to 3 months, maybe just over 2 months. The aim is for consistency, steady winning trades. So the goal is also to keep drawdowns to a minimum of 1% or less if we can. Even in the most uncertain of markets, for example, leading up to the fiscal cliff drama, the sequestration nonsense, the historical seasonal trends were accurate, reliable, predictable, period. It didn't matter what was happening in Washington. The seasonal patterns were there, they were present, and they were accurate. So let's take a look. Just a few months ago, on February 13th, Chevron, CVX, was highlighted by our seasonal forecaster. With CVX closing yesterday at 116.50, this is what Greg was writing on February 13th, an April 115 straddle bought at 590 would mean CVX would have to move at least 5% by expiration. So how did he know with confidence that Chevron would actually move and generate a profit? With proven data. This is what Greg's system does. CVX had a track record of movements over the subsequent 10 weeks, gaining on average 7% in an incredible 90% of the years. We're even talking when the market is crashing. 26 out of 29 years, it moved 7%. So now you can see the trade is looking even more feasible. Proven data of a stock's track record is not enough. There's additional information that is crucial. We got to have an entry point, an exit plan, and a clear strategy. And that's exactly what Greg provides. Here's the CVX straddle from February 13th. It talks about a straddle is entered at or shortly after the next market open. Exit as soon as 20% profits are reached. If Chevron and the straddle position haven't moved much within 3 weeks, close the position. Remember, Greg's not targeting any old strategy on any old stock. We're using the power of his system that he's built, the power of historical analysis, and then matching a strategy that will work best. So how did Chevron perform? 20% gain in just 1 month. That's not so bad. It's one of Greg's favorite strategies. He calls it the quick hit bull call. It's a rapid-fire, high-octane trade that produces big returns in a very short period of time. There's more than one strategy we can use. We can use a straddle. We can use a quick hit bull call. Either one will work. And in some cases, we can even use other strategies. How about this? There's more. February 27th, APC. It popped on Greg's screen. APC's hammer yesterday would form a cycle low, the same distance from December's cycle low, that it formed in October's cycle low. Now Greg's saying he thinks a quick hit bull call, not a straddle, just the quick hit bull call spread, will hit 20% profit target within a day or two. How did it perform? There's the candle. What happened 72 hours later? The trade gained 20% again. So sometimes when a really compelling opportunity arises, a more aggressive strategy is entered, as was the case on March 4, 2013. Once again, Bank of America has returned to the bottom of its trading range. The stochastics formed another buy signal. There's Bank of America. There's the stochastics. There's different criteria Greg's going to use in these trades. So I'm just giving you guys the highlights at this stage. The 6-week track record looks good for B of A. It made it back up to $12, an increase of only 5.5%. But the April 11 call was worth 33% more. So again, picking the time frames based on seasonal analysis. Anybody can do seasonal analysis, but it's cramming the data down, getting the best of the best stocks, and then putting it through some further criteria to get the best of the best of the best. That's the powerful combination. So what happened to Bank of America? Another 32% gain in 3 days. Even in the midst of great uncertainty around the fiscal cliff, extraordinary opportunities were spotted. Do you want to do another one? December 10th, 2012, LGF was spotlighted. Seasonally, LGF has 14 years of track record, and the next 16-week period has produced impressive moves, reflecting the fact major movies are typically released around the holidays. Sounds fine. So Greg wrote, when LGF moves this time of year, it can move significantly. How did he know? We're just using proven seasonal data. That's all. Lionsgate had the following track record. You can see each year with the gains. Okay. Take a look at the chart. If you were looking at this chart, what do you think was going to happen? Are you expecting breakout, breakdown? Frankly, the chart's not showing us anything. It looks like it's in a trading range. There's nothing going on. But that's where the seasonal analysis comes in. Look what happened. So in print, Greg's on the record saying the stock is now due to move. In print, all members have been notified. I don't think any other trading system could have predicted it, but Greg's seasonal forecaster criteria did. And look what happened. That's understanding that, you know what? The stock isn't doing anything. Why do you think it would go up? Historical data proving that, you know what? This is the time of year when stocks tend to move. You keep it tight, stop on it, and then if it pans out and the stock begins to rise, not only can you just get a quick hit bull call, but you can also use trailing stops that we know Steve talks about, right? And you can just let that little sucker run and run and run until A, you're tired of making money if you get those runners, or B, just use a trailing stop. LGF was up over 50% in 4 months. That's just the stock. So the very first results we ever saw of Greg's system, he had 12 trade ideas selected, and all 12 were winners. We were like, okay, yeah, right, whatever. So then we sat down and we picked a day at random. Saw 5 of 5 were winners. He still had a perfect record. Now, nothing's perfect, but so far it was like, this was amazing. So this got us curious. Could there be a trade every day? And the answer is no. There's going to be times when, even though there's positive seasonality or negative seasonality, that it could even be during a market correction, there will not be a trade every day. But when it comes up on his radar, meets the criteria, and the trigger is met, the accuracy is uncanny. So it was actually comforting to know that there won't be a trade every day, but we're waiting for the high probability trades. And it's the combination of, overlaying the probability with seasonal yields, using everything in his arsenal that gets us those amazing results. Poor volume patterns on most stocks suggest that institutions aren't even going to participate in the run-up. Sometimes the volume's not even there, but the seasonality is there. And then what do you know? Before you know it, the stock begins to trend. Another part of seasonality that can seem surprising is when you intuitively think a stock should rise, but it actually has a history of falling. Have any of you guys ever experienced that, where you enter a certain time of year and maybe there's a favorite stock on your watch list, and you're like, why doesn't this stock trend? Why doesn't it move higher? How about this one? Scott's Miracle-Gro, some of you guys may know by the name alone, might be one that you would think intuitively would perform well in the spring. It is springtime. That's when you'd expect SMG sales to be strong, right? Home Depot, Lowe's, the hardware stores. SMG's chart showed an uptrending channel. It looked like it was time to go long SMG. But how the chart was wrong. You look at its past. SMG's chart has historically had periods of uptrending channels. Intuitively, it makes sense to be bullish when the chart is trending higher. Plus, it's a stock that you would think would go up in the spring. We've said all that, right? But here's the thing. Using seasonal analysis, SMG seasonal tells us a whole different story. It actually averaged a 6.8% loss over the subsequent 8-week period, with losses 16 out of 20 years. The smart money is selling. They're moving on to other stocks. It's the retail traders that are getting sucked in. So what happened to SMG? Look what happened last year. It actually went down. Another that is a favorite this time of year in the springtime are retail traders going after H&R Block. Well, it's tax season. That stock has to go. Wrong. H&R Block actually drops. Why? The market plays the rise in expectations leading into the peak earnings quarter. And after that, it's time to book profits. Many people don't know that. They think they're dumbfounded when stocks don't go up in the time of year they expect them to. On H&R Block, from March 25th, HRB has an average of 4.6% loss over the subsequent 8 weeks. So here's a chart from March 25th. It's like, do you want to be buying H&R Block just because it's springtime? No, not at all. It's bad whether you hold the trade 1 week, 2 weeks, 3 weeks, 4 weeks, 5 weeks, 6 weeks, or even 8 weeks. You might be wondering at this stage, well, does the system only work with long stocks? It is true that seasonal patterns are typically upward biased. Plus, the market goes up more than it goes down. You heard the term markets go up in an escalator, down in an elevator. The 500-plus stocks that Greg follows with his seasonal analysis are well-known, actively traded. They are not stocks that have only been on the market 2 years. We're talking multiple years, decades. So these are very, very well-known companies because that's going to be the best way to get that seasonal pattern built out. You don't want a stock that is only out there for 3 years and it says, oh, it went up 3 times. That's not what this is. This has to have multiple years. They're America's best businesses. There may be individual down years, because nothing is going to go up at the same time every single year. That would be almost silly, right? But what if we did with Chevron when it's up 26 out of 29 years, or what if it's up 13 out of 15 years? Does that not give you a really great opportunity that if the stock starts to trigger, that you can jump on the train? It does work well with short stocks, or you can do long puts. Stocks do retreat seasonally too, fewer of them. And occasionally there are even strong seasonal downward patterns where stocks actually sell off. One of Greg's all-time favorites was shorting AMD. Greg said, hey guys, if you want to see a bearish seasonal, looks like, check out AMD in 2011. Just going back in time. He was just talking if it falls below a prior week's low as an example. Watch out, it's going to drop. And AMD ended up dropping. It's exactly what was expected. So whether you're going to go back to 11, 2012, or even some of the examples from 2013, and I have more examples to show you, some as recent as just this week. So back to the story, as we said, in the previous 27 years, AMD had not declined in only 2 of those years during that time frame. And Greg said, hey, AMD had a track record of declining an average of 17% over those weeks. So let's look at AMD. There were declines in there, but it was also in a big trading range. And then here's what Greg does. He'll go back, and here's even the years to show you what happened. So this is the actual chart that you would be sent. And it says the overall win total through the end of the week 11 weeks later, and the gain-loss for each year. He's targeting a specific period of time. This is not the whole year. It's like, hey, these 11 weeks every year, what happens? So you may say, I love shorting stocks. I don't care. I'm just going to trade AMD for a 4, 5, 6, 7, 8 week period. That's it, the whole year, and I don't trade AMD any other time. Then you go on to another stock. So you're waiting for that 11-week window on AMD to be bearish, and then when that's over, you go over and trade Chevron because in that period, it rises over the next 8 weeks. And you just keep going from one to the other to the other. This is just more commentary on what did AMD over the next 9 weeks. It broke through 3 different support levels, hit a low of 609. It would have been a 28% gain on a short position. We're talking short stock. That's huge. And there was a chart of AMD actually breaking down. Now here's something new. You guys want it up to the minute? I knew you would. On May 13th, yes, we're talking 3 days ago, Apple was alerted to the membership. And we said, you know what? Apple actually has a bearish seasonality right now. Despite what it's done in the past, it's just a numbers game. What does Apple do during these X amount of weeks? Well, it's bearish. Let's see what happened. So here's a picture of the alert. I'm not going to read it to you. But basically, he says, hey, if Apple continues its 2-day pullback, look to get short Apple using a bear put spread. 2 days later, May 15th, another alert to members. He says, hey, in Monday's newsletter, I focused on a bear put spread trade if Apple continues its pullback. That's exactly what happened. And he says, if today Apple shows more weakness, boom, there's your trade. In 1 day, okay, there's Monday. Now this is this year, Monday, this week. That's when he said, hey, Apple's entering a seasonal bearish pattern now. Now we want to watch for it. We want to wait for all the criteria is met. It took 2 days. It took till Wednesday till all the criteria was met. We're not just looking to trade a stock to be bearish. If it's bearish, 13 out of 15 weeks or 13 out of 15 years, that's fine. That gets us close. But we also need the daily criteria. When does that meet the final pieces of the puzzle? And he said, hey, if it opens bearish, all the criteria is going to be met. We now have a high probability trade because we have the seasonal bias with us. The stock is breaking support. If it hits here, it's a go. 1 day trade, 20%. And you might say, well, wait a minute. Apple was up today. Didn't matter. The whole point was only if it triggered on May 15th. If it goes bearish, we want to get in and get out. It'll be a quick bear put spread trade, a vertical debit trade. 20% were gone. You had your 20%. Could you have eked out more? You could have. But a couple hours is all we need. Here's another one. This is Polaris, PII, May 3rd. Buy the stock after a slight move up. Consider selling May 87.50 calls against the stock for a covered call. So we quickly went over a straddle, and some of you guys asked about that. And remember, straddles work when you have an expected move. They also work when implied volatility rises. So if you position it both ways, think about this. If you position it when implied volatility is low and when the stock is moving, you get the best of both worlds. That's how straddles can make money. Just placing a straddle on any old stock, that's a quick way to lose money unless you're really lucky. We talked about quick hit bull calls. Even use Chevron. You could do the straddle or a bull call. Either one worked. We just did Apple with a bear put. But what if you guys really aren't interested in spread trading? It's like, I'm just happy shorting stock, buying stock, or at most I want to do covered calls. Then Polaris. Snowmobiles, four-wheelers, the like. So he's like, all right, let's buy the stock. This is May 3rd. And this is only going to be a May expiration trade. This is not going to be very long, even for a covered call. So Greg said, buy the stock May 3rd or do a covered call. The stock was right around, I'll just round it up, $86. Now here's today. I took this chart intraday today, around middle of the day, 12 noon Eastern. The option's going to expire tomorrow. Assuming it stays above the 87.50 short call, it's 4.1% in 14 days less commissions. Is that good? Is that a great example of a nice covered call? Simple trade, just using seasonal analysis to your advantage. And you might say, well, that's fine if the market's bullish, but what if it's in a trading range? Lionsgate Film was a great example. That stock was going nowhere into the end of the year. Nobody thought it was going to go up 50%. But seasonal analysis said it's going to rise. Can it predict the exact rise of the move? Can it say, oh, it has to go from, 0% to 8% every year? It's like, no, that's the average. And in the case of Lionsgate that we looked at, it was up 50%. We don't care if it's up 5%, depending on the strategy we apply. We just want to get ourselves in a position. We're not looking to make the whole move. I mean, frankly, if somebody just bought the stock at $86, they're up over $4.50 a share. Yeah, we're happy making a covered call and having a high probability chance of winning. So, Greg's system was out last year. It was out this year. It has a track record. And we're going to talk about it. You'll have access to that as well. So by now you're probably wondering why all the selections that good. Are they that good? And of course, nothing is going to be 100% perfect, but it's about high probability. There was a period where Greg went 19 for 19. Seriously, 19 for 19. This every 3 days a week, Greg sends out a newsletter. So if he's ever on it, there's complete transparency. The recent is 38 issued, 34 winners. He's batting 9 out of 10 using seasonal analysis 1 and then running it through his rigorous filters. Period. These are all the trades. If you're saying, well, were some trades omitted? No, that's every single one that triggered. Every single one. So virtually every trading day of the year, a new stock is on the verge of breaking out to replicate proven seasonal patterns from previous years. You might think, does this happen every year? Why does it happen? Why would stocks repeat the same price behavior? There's nothing proprietary about doing the analysis. Anybody can go back and look. For whatever reason, stocks, certain ones, will rise and fall. So if you want to see, hey, does Chevron rise those specific weeks? You can go check it yourself. Different brokers, TradeStation, Thinkorswim, they have backtesting data. But why? Well, when big money's moving in and out of stocks, they can't do it all in one day. They can't just buy a stock today, their whole position, or it's not going to work. Everybody's going to be jumping on. There'll be a huge price spike. They do it over time. There's window dressing. Fund managers want to make their quarters. We talked about the Santa Claus rally. Whatever the reason, patterns occur. One of them was Paul Tudor Jones. He was talking about the crash. And he was so convinced in 87, he was right. The information demonstrated conclusively that seasonal and cyclical patterns occur. And it proves that even if we don't know why they occur, whoever they are buying the stocks doesn't matter. They're elephants. They leave footprints. They buy over time. The fact that we can follow these stocks over and over again allows us to take advantage of them. And we can actually forecast future trends. Well, how can you forecast something that hasn't happened? Because 26 out of 29 years, Don't ask me why, but the stock goes up. All we do is put a trigger on it. Greg's going to run through some filters. I said that before. Then we're going to put a trigger on it. If it hits, we use a trailing stop. Some of you guys are commenting about the T-line. That's an awesome way to use a trailing stop as well. That's totally cool. We like the 5 and 8 day as well. So you're probably wondering, how do I get access to the stocks that have seasonal tailwinds? So whether you're a rookie, you're more experienced, it doesn't matter. Whether you're a covered call trader, whether you're a quick hit trader, you want to do bull calls, you just want to get in and get out. The reason we like bull calls over long calls is your risk is hedged. If you just want to trade directional, go ahead. But sometimes it takes a few weeks for the trades to work. Other times it takes a day. And if you're out there buying directional long options, and that stock takes 2 weeks to move up, you can't have, what's the old phrase, ants in your pants. You can't say, no, wait a minute. Greg said XYZ stock was supposed to go up. Yeah, over 8 weeks or over 4 weeks. So if it hasn't gone up in a month, and you just own a long call, you're having time decay, theta decay, kill you every single day. So we often prefer the spread trades, where that way you're buying and selling an option, theta decay is somewhat minimized, and it gives it a chance to work. Another common question is, well, what about those covered calls? Hey, those are great too. Covered calls work fine. You can buy the stock, and you say, well, what if it doesn't go up? Short a call, you can make your own dividend, because over 6 to 8 weeks, it goes up. Just look at the data. And the data is provable. That's what makes it nice and makes people feel comfortable with it, because if they say, what are you talking about? This stock goes up, these 8 weeks for the last 10 years. Go look. You can prove it. Look at any chart. In our seasonal forecaster newsletter, it's delivered on Mondays, Wednesdays, and Fridays. So it's 3 days a week. We also have email access to Greg as well. It talks about seasonal patterns. He reviews the open trades. So you're always kept in the loop. There's no longer playing catch up. You're going to know the seasonal trends before they happen. It's not something that Greg says, 6 weeks in, oh, by the way, this stock has a seasonal, bias to the upside. It's like, no. You're going to know week 1, because what's the point if you know about it too late? It's actually getting in before it happens. So each issue of the forecaster, Monday, Wednesday, Friday, you're going to have actionable trade ideas. You'll know which stocks are going to be moving, allows you to capitalize on the trends, and strategies to use with exits. One of the common questions I get is, they've seen what makes this so special. Greg's record speaks for itself. It will be provided to you via email. You don't have to even log in, or you can log in. The seasonal forecaster will show up in your inbox before that day's open. So Greg's a night owl. He's often creating this stuff at 1, 2, 3 in the morning, and then you guys always have it in your inbox, so it's always relevant. So here is the offer for Steve. When we were talking to Steve about doing a presentation, we're going to be putting the price up later this year. That's no joke, because Greg's record is that amazing. When you log in, you will see his record. When you log in, you go to the Seasonal Forecaster tab, and at the bottom, you can click on the record and see all of the trades. Everything is completely transparent. Greg knows who does what in the industry. We've had other people come to us and say, you know what, Ron? We've seen seasonal analysis before, but nobody's record even touches it. So if you want to check it out, we'd love to have you. This is a deal for Steve's members only. So it's $6 for 14 days. If you don't want to continue after 14 days, you can just walk away. Send us an email, say, hey, we appreciate the trial. We've checked out Greg's record, and you can agree, disagree, if you want to stay on. But every single trade is tracked and documented. You also have email access to Greg if you have any questions. You might say, well, Greg, I don't get this. Why are you doing this kind of trade? And one of the most common ones is, hey, Greg, if you guys see a stock that has a habit of rising, let's say it's a $100 stock, just for simplicity, and it has a habit of rising 10% over the next 10 weeks, why don't you just buy it and hold it for 10 weeks? If you say it's going to rise 10%, well, it's important. It was an average of 10%. If the average gain over the next 10 weeks was 1%, it's not worth doing. So by the fact that the stock goes from 100 to 110, let's say in 10 weeks, why can't we do a covered call? Or even do weekly covered calls? You don't want to stay in there for the full 10%. So you can actually replicate this process more than once on these stocks. What Greg likes to do, he likes to go after them one at a time. Period. It's like, the stock moves up. I don't need to make the 10%. And with options, you can make even more, right? It's like, when I have all this lined up and the stocks start to move and we're in the right window for that opportunity to move, I don't know if it's going to move 3% or 10%. Let's just get in and then get out. And that's covered each week in the seasonal forecaster. So I don't want to make this too long. I want to respect your time because I know you guys are here, and it's been about 40 minutes or so. So if you guys have any questions, please feel free to ask. I'd love to hear it. I'm going to put a dash in here so I can track your questions. But feel free to ask anything you want. I'll answer any question you guys have. But this is the one thing we've been, can't tell you how excited we are. Because when we saw the data, it was amazing. And then actually having it for our members since last year and this year, the results are extraordinary. Absolutely stunning. All right. Let me start with Ron. Hey there, Ron. Thanks for the question. I appreciate it. Does this system pick up, down, and sideways trends? It is up and it is down, Ron. Thanks for the question. We're looking for moves. Up and down. Remember, most will be up because that's just the bias of the stock market. Mike, no disrespect intended. Hey, Mike, none taken. But what did Greg recommend on Monday? Actually, I went over it. It was Apple. Apple was Monday's pick. It was bearish, despite the market being bullish. And on Wednesday, it triggered, so it was a 20% return. And that was only in a few hours. So appreciate the question. Hey there, Miss Peg. Okay, yeah, so somebody asked, hey, this sounds fine. It's only $6. It's the price of a mocha anymore at Starbucks. What do you do after 14 days? It rebills at $237 a quarter. You can cancel any time. So you have 14 days to try it out. Just send us an email and say, hey, thank you, but no thanks. I want to cancel. And that's it. An email does it. That's all you got to do. You don't have to even call us. Just drop us an email. We make life super easy. And customer service is immensely important to us. So we want to make sure you guys are happy. So when you get in there, if you got questions, please send us an email and we will get back to you. We can also connect you with Greg directly. That's one of the questions people ask. Can we actually email Greg to get an answer from him? That's the whole point. Absolutely. So once you're a member, we provide Greg's email address. You bet. All right, let me just go back to my dots. All right. Hey there, Greg M. Can you tell us how to search for the candidates? Greg, that's what we do for you. The seasonality of going back in time and saying which stocks rise certain weeks, anybody can do. You can do it, Greg. I can do it. Our friends can do it. But it's the idea of then running it through the filters to even cull the herd further. Now, if you think about all the time it takes to go back and pick stocks and look at their seasonal analysis, you'd be tied up probably for the next 5 years trying to get the same list that Greg had put together in an evening. That's the software he's built. But the part that you would say, well, can I see if this properly works? Yeah. When he gives you the newsletter and says on the chart, this is the amount of weeks that the stock moves, you can then go back in your own platform, whether it's TradeStation, Thinkorswim, Options Express, whatever, just bring up a 5, 10, 20-year chart and say, oh my gosh, it actually does. But then your next question is going to be, well, why did Greg pick this one? That's the other criteria he's running it through. that takes any average seasonal forecaster pick by anybody and then breaks it down to the best of the best. And you might say, well, how do we know it's the best of the best? When you log in, you're going to see 34 out of 38 winners. Are you kidding me? It's going to be one of those moments. So, we're very proud to have Greg part of our team. So I appreciate those questions. Let me see. All right. So Miss Peg got Carrie. Hey there, Zach. Zach, you have a funny tagline. But how true, huh? Do you short picks? Yes, you can short picks. All right, Chuck Z. Yes, we do give sells. But remember, this is always a common question about the short picks. Remember, the majority are going to be long because of the market. The market rises more than it falls over time. But there will be bearish picks. And, I know Apple's been in a bearish trend, and if you've been playing it, that's fine. Us at Market Tamer, we were bearish in the mid-sixes. We said, you know what? The bulls don't have this anymore. The bears are now taking control. We lost the 50-day moving average, but that's not what Greg's about. What Greg's about is seasonality. He's agnostic. He doesn't need to know, and I'm just going to pick on somebody, that, Chuck, Sam, and Nancy, let's say, we all love Apple. Maybe we don't. It doesn't matter. Greg's like, I don't care if it's a 3 or 4 digit stock symbol. Just give me the symbol, and either it's going to be bullish or bearish, or I'm not trading it. And regardless if it's a love or hated stock, Apple was listed bearish. 2 days later, he's like, I'm just waiting for the trigger. And that was Wednesday. All right. MP, that is a whole nother ball of wax, and that involves tons of regulation. That's all I'm going to say about that. MN, is it a newsletter or a chat service? Very good question. It is a newsletter. So you'll be emailed a newsletter 3 times a week. Now, tomorrow's Friday. So tomorrow morning before 9 a.m. Eastern, you're going to have his latest newsletter in your inbox. And then there's going to be one on Monday, and one on Wednesday, and one on Friday. So you're going to have a total of 6 newsletters. So literally, it's $1 an issue. The $6 just basically covers our transaction fees, I guess you could say. Warren, does Greg tell us what triggers to look for? Yes, absolutely. Wayne, some of the charts that we looked at, let me see if I can find it. I'll just quickly show it to you. Here. Here was the Apple one. So he'll talk about the strategy, the entry, he'll go over the exit plans. So you're going to know all that, before you even consider the trade. And, everybody here probably has a brokerage account, and you probably have access to paper trading. When the trade's triggered, just throw them in a portfolio, a paper portfolio. And then if you say, well, what should I do? Then just email Greg, and then we can go back and forth, and you can see how it works. But yeah, there's complete transparency. There's nothing, the only thing Greg won't give you is the actual criteria in his filter, because he spends so much of his sweat, building it out. So I hope that helps, Warren. All the shorties, and then, yep, got you. So MN, coming back to you, you will get entries and you will get exits. Oh, sorry, here is the link to sign up. You can get your trial here. Again, it's just $6 for 14 days, and then you get to see what it's about. I'm going to say now you're going to love it because of the way we do it. And folks that are familiar with us know that we do have great customer service. Okay, what time? Okay, hey there, I think it's Minaj. Minaj, it is, usually we say 9 a.m. Eastern, but it's out before then. So what happens is you get the newsletter before each trading day. Some of these trades, some of these trades are going to last for a couple weeks maybe. Look at that Polaris covered call. That one was only going to last about 12, 13 days. But you could also have done a June covered call if you want to. given this market, I don't know how you guys like to trade, but I'm fine being bullish. I'm happy with that. But everything is on a short leash, especially with today's move. There needs to be follow through to confirm, but right now the moving averages are basically still trending upwards. So I'm fine being bullish, but I'd rather keep my exposure to short term. Like, I'm really not keen on, if you're looking for short term income, you can use weekly covered calls, monthly covered calls. I'm not looking to be bullish, many months out. I'm going to give you our email address as well. There's our email address. And here is our purchase link. All right. Some of you guys are funny. Let's see here. Okay, hey there, Ed. I put the link in the bottom. Thank you. Indrajit. Yes, you can if you want to. Yes. Now, here's the deal. It's only $237 a quarter, which I think works out to like $79 a month. I think. Yeah, $79 a month. We're going to be putting the price up, but when we chatted with Steve, I think it was like 2 months ago with him and Pat, we're not raising the price till the summer. Just because we can. The accuracy is so good. So this is one of the final presentations, and we did it for Steve, for you guys. So when you get in, there is no price adjustment. You're locked in at that price forever. When the price goes up, that's only for new members. All our current members, they remain grandfathered. And some of you guys know that. We put prices up on other services, but it never affects members. You guys are always grandfathered. All right. MN. Okay, just in case the trade goes against your expectation, how do we know when to exit? That's a great question, MN. In every newsletter, it tells you the exit. So you're going to know, hey, if it breaks below this, let's get out. So you don't need to have that lifeline of hit the 911 button to get a hold of Greg. You'll know all this so you can trade, without emotion. Now, the other thing I want to point out, though, is if Greg's talking about a covered call, like he did on Polaris, and the stock dropped 1% today, that doesn't mean we have to get out of the trade. So you have to remember, and this is for everybody, the type of trade you're placing. If Greg was talking about a Polaris covered call, well, he'll have an exit strategy there. If you're given 2 trades, where one time he might say, hey, Chevron, you could do a straddle, you could do a bull call. On the next stock, you could do a bull call or a covered call. Well, you got to stick with the exits with that pick. So if you're trading a bull call and the stock drops a few percent, that's a problem, and you're going to exit. But if it's a covered call, depending how much credit you took in, it's not going to be a problem at all. So I hope that helps. Ed, that's interesting. Thanks for bringing that up about Trader's Almanac. I have sat through some other folks' stuff, and I have read Trader's Almanac. And the thing with Greg, what he put together, was, listen, he said to himself, anybody can find seasonal tendencies. It just takes forever. I think you guys would agree, right? Anybody can find seasonal tendencies. You just need the time. We could all spend the next 2 hours and all come up with a fantastic stock. But how do we know it's going to be the best one out there? And what makes it the best one? Because we don't want to find 5 stocks. We don't really want to trade all 5 today. I just want the best one. That's what Greg does. So he takes the data that almost anybody can get a hold of, per se, and then runs it through his filters. So he gets the best of the best. He has his own criteria that says, I don't want to trade a stock that was up 12 out of 20 years. I want the one that was up 17 out of 20. And I want these other things too. And if he can get all that criteria met, that's when we get to see it. So if you wonder, does Greg have to put forth a lot of effort? Well, he's built the programming out to do this for him. But yeah, there's many stocks that have positive seasonal tendencies that never even make it on his list because there's too many, and we only want the best ones or the best one. And I think that might go to a question earlier. Could there be a week where there's no tendencies? Absolutely, there could be a week with no tendencies. But I don't want to be trading stuff just for trading stuff. I want to be trading stuff because it's going to work. I think everybody would agree with that. So great questions. You guys have lots of great questions. My goodness. Bill Z, thank you for mentioning that. Absolutely. Paper trade, multiple months. But if you guys trade spreads or trade covered calls and trade stocks, at least do paper trading for a couple weeks while you're on your trial. Let's see what else. Watsaman. What's the minimum account size required to trade your system? It depends what kind of trades you want to do. If you're looking to buy Polaris, you're going to need, $80 stock? You figure 5%. You're going to need 40, 50 grand if you want to trade Polaris with a covered call, trying to keep the risk exposure maybe to, theoretical risk as little as possible. But if you're looking to trade a bull call on Polaris, you could have as little as 5,000. But I would say 5,000 would be the minimum. You can do it with 2,000. I don't like to say it just because people end up too often throwing $1,000 at it and then it destroys their account if they're wrong. So we want to keep our, we want to keep our risk in control. So I would say 5,000 would be the minimum, to be frank. And if you paper trade first, put it this way. If I was going to try something, I would want to paper trade it, and what I would hope for is the worst things to happen immediately. It may not be good from a sales perspective, but then you understand as a trader, did you have your risk profile under control? Or were you over leveraged? Did you have too much money? It's better to learn with paper money. I know some people don't like to do it, but my goodness, we all work way too hard for our money. We don't want to lose it just because we didn't understand something, we made a mistake, or we were a victim of circumstance. MN, you don't trade options. Can you still use stock? The answer is yes, you can. Yes, you can. Because we're talking about tendencies. Now, with that said, MN, let me just give you that example real quick. If you have a stock that's $100, and let's say it rises 10% in 10 weeks, that's the average gain. I'm just making this up. 25 out of 27 years. That's the average gain. So the stock might go up 25% some years, and only 2% the next. So what I'd be looking to do is, when I'm just trading stock, you want to shoot for the absolute low end of that. So if you have a stock that's $100 and it comes up as a seasonal bias bullish, and it says it goes up 10% the next 10 weeks, if you could make 2% in a week or two, I'd just get out. And then just wait for the next stock, and you just keep finding a new one, because there could be a stock 3 days a week. If you want to hold it longer, of course you can. You could use the 5 and the 8 day EMAs as trailing stops. You could sell part of the position right away if you get a 1 or 2 day gain, and then let the rest run. I'm a big fan of that. I'm a big fan of scaling. And that goes for the forecaster too. If you guys want to turn some, or have the ability to turn some of these trades into monster winners, then let's say you do 3 bull call contracts. You sell 1 bull call following Greg's exits, 20% in a couple days. Then the others just let run, free willy. Let them go. And when they close below a moving average, then bail. So you can have the best of both worlds in that respect. But when the exit is hit for a loss, they all go. I don't like scaling out on the downside. It's all or nothing. Either it worked or it didn't, you're out. But on the upside, I'm a huge fan of scaling out. W2J, you keep saying covered calls, but aren't covered calls sold when a stock is going down? Absolutely not. I love selling covered calls when stocks go up because it also pays a dividend. I like selling covered calls when stocks are in trading ranges. Those are broad statements, but true. Now, what I like to do is if I see a stock that is at the bottom end of a trading range, let's say the past 4 to 6 months, and it goes up, down, it goes up $5, down $5, up $5, down $5. Well, if it's at the bottom end of that trading range and the stock starts to bounce, at that point in time, if I want to be a greedy little piggy, I don't want to sell a covered call because let the stock go up. And then when it hits resistance, I'll sell a covered call. So the way we teach covered calls at Market Tamer is you can short calls whenever you darn please, because it puts money in your pocket. And every single time you short a call against your stock, you're paying yourself money. And if you're paying yourself money, like a dividend, to use a similarity, it lowers your cost basis. There's less money you can lose. So I appreciate that question. Thank you. But there's a lot of cool ways to use covered calls. And when stocks start falling and they start setting newer lows, like Apple back in October of last year, when it lost the 50-day moving average, not only do we start shorting calls, we start buying puts at that stage because Apple's mojo was gone. I'm not saying Apple can't go back up to those prices, but right now technically it's a broken stock. We got to wait for it to start making some new swing highs. Zach, it is funny. All right, let's see here. Oh my God, are these all questions? Yes, they are. Holy cow. Is there a room or chat that comes with the newsletter? No. You get email access to Greg, and you also get the newsletter 3 times a week. And what he'll also do is sometimes he'll get the same question 5 times in one day. What he'll actually do is not only respond to you, but put that question in the newsletter 2 days later. So Monday, Wednesday, Friday, plus email access. We are throwing around the idea, Jay, but it's not been put in print yet, about having a chat blog just for seasonal forecaster members. All right, let's see. We got that. What percentage of covered calls, what percentage of trades are covered calls from Carlene? It all depends. Greg likes his quick hit bull calls. I'm going to be guessing. I don't know the exact percentage. But when you look at the seasonal tendencies, and if it goes up over 8 weeks, you can do covered calls in the front months at the same time. What I would do at that stage is if you're thinking of a covered call, then use Greg and say, hey, Greg, I know you just said about a quick hit bull call, but can I do a covered call? And he'll reply back with an answer. So many of the picks you can do covered calls on because of those seasonal tendencies. Jay prefers bull put spread over covered call spread. I agree, Jay. I like bull puts myself. So I'm with you. But there's different ways to do it. There's so many different types of traders out there that Greg at times will even say, all right, I've done 3 bull calls in a row. If I can do a covered call here, I will. So it tries to keep everybody happy. Okay, Gary, you can trade just stock, yes. Does the letter cover more option trades or covered calls? We don't like directional option trades just because of the theta decay. Now, that's with the seasonal forecaster. Do I personally like directional option trades? Oh, you bet. I have no problem buying calls and buying puts by themselves. Absolutely. Or even doing a ratio, going like 5 long calls, 3 short calls, or 2 short calls, something like that. That's cool. But when it comes to the seasonal forecaster, if you're going to play a 5-week trend or a 3-week trend, you ideally do not want to just buy a long call if you know that going in, because you know right away that if you're going to play a 3 to 5 week trend, which is longer, Greg's quick hit bull calls, if I can interject on the topic, Greg's quick hit bull calls 1, 2, 3 day trades. That's why they're called quick hits. You are in and out so fast, you don't even know what happened. But when you start saying, hey, I'm going to do a covered call or go 3 to 5 weeks out, If you just buy a long call, you might lose 20% of its value till that's done. And that's a real bummer. So that's why, covered calls work well because you're selling time. Bull puts can work. I forget who mentioned that, but they work. Or at the very least, a bull call. So you're buying and selling simultaneously. So great questions. I think I'm catching up here. All right. Thanks, Nancy. Got it. Okay. Hey there, Ron P. How you doing? Yes. You can use credit card. You can also use PayPal if you want to. We can do that. Mike M., if you want a background on Greg, shoot me an email and I'll get Greg to correspond with you. But basically, he's an engineer, and you know how those engineers are. That's all I'm going to say. Gareth's an engineer, too. So I think Gareth and Greg, Gareth's fitness partner, the CEO of the company, when Gareth and Greg start talking, I'm like, I need to go get an ice cream. They are two very bright individuals. I like to pick on engineers, which is weird because I bet you half my friends are engineers. I don't know what that says about me. Zach, it depends on the strategy, and that's what Greg gives you. The strategy can be a covered call this time. It could be a quick hit bull call, and there'll be times when Greg's going to say, "Hey, folks, we could do a covered call, or we could do a quick hit bull call." And this is why I like the one trade over the other. And he'll flat out spell it out to you. So it becomes educational as well. All right, let's see here. Carrie's an engineer. I know, seriously. I get along well with engineers, but I do like to pick on them because they're so analytical. But I'm also analytical. But yeah, Greg is an engineer. Does the letter give the exact buy-sell price targets? Yeah, Niaz, I hope I'm saying your name right. Greg's going to flat out. Sometimes the trigger price, Niaz, is just that the stock opens positive. It could be something as simple as that. Or he might say, listen, we need the stock to get over the 5-day EMA. Well, that you're just going to see on the chart. All right. If you guys are having any problems with the website, it should be working fine, but you can go ahead and shoot me an email. Let me just click this. Yeah, it's working. All right. Here I can show to all, I think. Oh, it closed. Okay. There. What else do we have here? ETFs. Yeah, Dave, sometimes there are ETFs. You bet. Yep. Now, just think about that, though. There's, tons and tons more stocks than ETFs, so the ETFs will be fewer just because they should be. How about the engineer's statement? Oh, you got a question. Oh, I'm going, sir. I'll tell you what, Carrie. Here's what you can do. If you're talking about a couple weeks, but you don't want to do it today, if you shoot us an email, Carrie and Misty will tag it, and you just let us know when you come back, when you're ready. And, if the price goes up, it's not a big deal. We'll just put you in at the old price. That's something simple and easy to do. But we're just being upfront that this is going to go. What we're thinking about is $2,000 a year. That's what the new price is going to be, and it's probably going to be either a 2-pay or a 1-pay, or we'll offer both. But it's not going to be $6 and then $237 a quarter. That's what it won't be. So you're talking a couple weeks. That's no worry at all. Just shoot us an email. They'll tag it. They'll know you have you on file, and then when you're ready, you just come back. It's that easy. All right, MN, that is fair enough. And when you guys sign up, which I'm not able to see how many of you guys are signing up. If you got feedback after you go through a couple issues, drop us an email. Greg's always willing to listen to everybody that has comments. Bud, I'm not sure because of your address. If that was a credit card issue, Bud, what often happens is the credit card company might have a different address than what you're entering. And I say that because, believe it or not, sometimes when you update your address online, if you moved recently, if they have lane and it was dry, that can reject it. If you lived on a bullet, it could be something as simple as they typed in the wrong zip code on their end. So if you're getting it because it's an address problem, you just give your credit card company a call, and then I'll tell you what you do. You make them read it to you because they tend to be lazy, and they're just going to say, "Oh yeah, it matches." So use it all the time. Well, I don't know what to tell you. Other folks are signing up, but they're not having problems. So, Bud, if you want to, if you send us an email, you can pay by PayPal. If you'd like to do that. Or we can have Misty or Carrie give you a buzz. We can try to hand process it for you. Okay. Well, hey, guys, I'm sorry. I didn't realize it's like 9:15. Zach, do I take food stamps? No, we are not the government. We are actually a reputable business. I mean, of the government. Put it this way. I am not a... Oh, hey, Steve.
Yeah, Ron, this was great. I appreciate we all appreciate good information like this.
All right, well, thanks. Yeah, sorry I went over. I didn't realize it was quarter after, but I want to say thanks to everybody for attending. And Steve, thank you for letting us come in. We appreciate it. And Gareth says hi from Ireland.
Okay, great. All right, well, very good. It was good information, and I hope we get a lot of interest.
All right, thank you very much. Have a great night, everybody. Bye-bye.
And thank you, everybody, for coming. We will see you in the chat rooms tomorrow.